Lyft is having a nice day today. The stock is up 6%. Good to see. And year to date, the stock is up 10.6%. So it's doing well already in 2025. This is a beaten down stock. And I created a short video. I also did a comparison versus Uber back in January. And my feeling about Lyft hasn't changed. I still think it's a undervalued stock that is highly discounted. And I wanted to share my analysis with you and tell you why I continue to buy shares in Lyft. Let's get started with fundamentals. So, this is a small cap stock. I like that. Lyft has a pretty recognizable brand, but the market cap's tiny. They also make money. That's good. Forward P is only 13. Looks great. 31 analysts cover the stock, and they believe it is discounted by 20%, and it's a buy. Now, the market did not like the earnings that were announced last week. Sold off the stock, but the stock is recovering. This is going to be a volatile stock, to say the least. But this stock is so discounted, it really, in my mind, becomes an acquisition target. If you think about the customer base that they have, the platform, all those things could be really valuable and desirable to a bigger company. A Tesla, a Waymo by Google Alphabet, maybe even an Airbnb or a Booking. They buy this company at right now they're $6 billion. You could buy them at a really low discount. And this company really provides very good revenue growth at 31%. 31% revenue growth in the trailing 12 months. That is excellent. Not only are they growing, they're profitable, and they generate very good free cash flow. It's good across the board. It just hasn't kept up. The stock has not kept up with Uber, and it shouldn't be as valuable as Uber. I would agree. I'm an Uber stockholder, by the way. So the stock is being sold off at a discount. 31 analysts cover it. Some analysts believe it's highly discounted. Their price target's way up there at $26 a share. The worst case scenario is not that bad, down at $10 a share. So I like the number of analysts covering the stock, showing that, hey, there's consensus that this company is discounted. With robotaxi being really a popular business, and I think what's going to be the future model, Lyft becomes a very valuable asset to a bigger company that wants to be a player in robotaxi, for sure. Lyft is going to get into robotaxi through partnerships, and I think that's going to be a good thing for them, a very good thing. When we look at their profitability, it's going to expand. We look at their current, they were just barely profitable in 2024. 2025, boom, $1.05, just a big jump in profitability. And then from there, they're going to continue to grow their profits. So their profits will expand over time. That looks excellent. Again, I look at this stock and just see fundamentals that tell me this stock is discounted, which is why I'm buying the stock. So Lyft, in my opinion, is discounted by 105%. This could be the first stock in my portfolio from this point forward to double in value here in 2025. It could really scream up because it's highly discounted. It's seeing flashes of just rallying to the upside. As more investors discover it, I think this stock's going to really fly up. So that's why I bought the stock. The main discount that I'm seeing on the stock is their cash flows. Their cash flows are very good. And I could pattern Lyft to Uber. Uber is really accelerating their cash flows. Their cash flows are really growing. And it makes sense because a business like this, Lyft doesn't have to buy cars to grow. They don't have to hire people and train them to grow. They basically, drivers come on, they're independent contractors, and that driver will bring their car along and provide it as part of the gig that they're performing. So that really frees up a lot of cash, makes this business really desirable. That said, those free cash flows are worth $12.7 billion if I discount it by 10%, which is a higher discount rate than Uber. Uber is less risky. Everybody knows Uber is a leader. A 10% discount rate on that forecast of free cash gives me an intrinsic value of $12.7 billion. The company has more cash than they do debt. One more metric that's desirable. I want companies that generate cash, put it on the balance sheet so that they can be strong. They're not going to go bankrupt. So the equity value on Lyft is $13.7 billion. The market cap's only $5.8 billion. So 134% discount if we just look at Lyft based on its cash flow forecast that I'm putting together. Earnings per share are going to fly up to 106. I think their PE is going to expand to 18. If you compare them to other companies growing at 30% in a very desirable, profitable industry, I think they deserve more like 30, but let's just go up to 18. Based on that valuation, the stock's discounted by 48%. So overall, this is just a really nicely discounted stock. One super investor, David Tepper, owns Lyft. And although he's sold a few of his shares, he still owns $174 million worth of Lyft. And I like David Tepper's style. A lot of the investments he's made, and I don't follow him and then make my investments based on exactly what he buys. But I own Baba, I own Amazon, I don't own Pinduoduo, I don't own Microsoft, I own Google, I own Meta, and so forth. So this is a very respected super investor, one of the best invested investors out there, and he's into Lyft. So that just gives me a little more confidence about the investment. So that's my video on Lyft. I hope you found it interesting. I'd love to hear your thoughts on what you think of Lyft. Is it a good stock in your opinion? Do you see problems with it? I think the upside is pretty clear, and the stock is so discounted, it can't go any further. It can't go down any further. They just generate too much cash. They're going to generate close to $1 billion of cash a year. And their market cap's only $6 billion. That ratio is just so attractive. They're growing at 31%. Those things just really, really make me bullish on Lyft. So I'm going to keep buying shares and see where this goes. Again, I think this stock could be the first stock to double from this point going forward because it could be acquired. Investors could really recognize this stock, especially as it breaks out, having a day like a 6% rise in a day. And all the attention on robotaxi, all the attention on ride sharing, that it's going to be a big market. It's going to be a very valuable market in the future. So thank you for watching my video. I appreciate it. And let me wish you the best of success in investing.